The folder lands on your desk at 5:47 in the morning, and nobody explains what it is. You open it. Blue pen annotations in the margins, not highlights, annotations, and a number at the top of the first page that is larger than anything you have personally been responsible for in your entire life. You are 24 years old. You are sitting on the 31st floor of a building in Lower Manhattan, and the city below you is still dark. And you understand, without anyone telling you, that this is the test, not the analysis. The fact that you showed up before the test existed. That is how Wall Street finds out who you are. Your badge still smells like the chemical printer that made it. You have 3 monitors and a login that took 11 business days to process, and a managing director 2 floors up who has not learned your name yet. Your title is analyst. Your salary is $110,000 before taxes, which sounds like a lot until you divide it by the hours and discover you are making less per hour than the woman who drives your Uber home at 2 in the morning. You know this. You do not say it. The work is not glamorous. The work is formatting. Pitch books that get revised 16 times. Models that get rebuilt from scratch because someone on the 4th floor changed an assumption on a Tuesday afternoon and nobody told you until Thursday. You are the last person the information reaches and the first person blamed when a number is wrong. But you learn something here that they do not teach anywhere. You learn how a deal actually moves. Not the theory, the physics of it. Who calls whom? Who waits? Which senior associate has the managing director's ear and which one thinks he does? You learn the difference between the person whose approval matters and the person whose approval everyone pretends matters. These are not the same person. They are rarely even in the same room. You are 26 when they ask you to stay late for a call with a client in Houston. You are not invited to speak. You are there to take notes and pull numbers if they are needed. The client is a private equity firm managing $6.3 billion in assets, and the conversation is about a deal structure you spent 3 weeks building models for. And at one point, the managing director on your side says a number that is wrong by $40 million in a way that matters, and you feel your stomach go still. You write the correct number on a yellow notepad and slide it across the table without saying a word. He glances at it, keeps talking, uses the right number like he always knew it. After the call, he stops in the doorway and looks back at you with an expression you will spend years trying to read. He says nothing. That was the moment. You did not know it then. That is when your education begins. You make associate. Your base moves to $175,000, and your bonus in a good year makes the total look closer to $280,000. And you are 28 years old, and you feel, for approximately 6 weeks, like you have arrived somewhere. Then you understand what the level actually is. The associate level is where the work becomes yours. Before, you were executing other people's thinking. Now, you are generating it. And the gap between those two things is the gap between knowing how to swing a hammer and knowing what to build. The analysts below you are technically skilled. You were technically skilled. Skill is not the constraint anymore. Judgment is. And judgment cannot be taught. It can only be acquired through decisions that cost something. You are on a deal in Chicago, a middle-market industrial company, $340 million enterprise value, 7 times EBITDA multiple, and the due diligence has surfaced something in the customer concentration numbers that the model does not fully capture. 41% of revenue from one counterparty. The contract has 18 months left. No renewal clause has been signed. You flag it. Your vice president tells you the deal is already in motion. You flag it again in writing. The deal closes. 14 months later, the counterparty does not renew. Nobody remembers you flagged it. What they remember is that you were on the team. That is the thing about this world. The credit flows upward. The consequences flow downward. And for a long time, you believe the solution is to get higher. Vice President, your total comp in year 1 is $420,000. You are 31. You have been in this business long enough to know which conference rooms have the real meetings and which ones exist to give the appearance of inclusion. You schedule yourself into both kinds. At this level, you stop being a person who executes. You start being a person who is managed around. The managing directors above you are protecting deal flow, protecting relationships, protecting access. You are useful when you are invisible and dangerous when you have opinions about things above your designated lane. brain. You develop a skill nobody put on the job description. You learn to make your ideas feel like other people's ideas. You learn to plant a concern in a Monday conversation and let it grow until Thursday, when the managing director announces it as his own thinking, and you sit across the table and agree that yes, that is exactly right. That is a real concern worth taking seriously. You are not compromising yourself. You are learning the physics of institutional power. That is what you tell yourself. For a while, it is even true. The managing director who learned your name, eventually, takes you to dinner on a Tuesday in November. Not a client dinner, just dinner. A place on the Upper East Side where the tables are far enough apart that conversations do not travel. He orders without looking at the menu. He has been in this business for 23 years, and he has the quality that certain people in certain rooms have, a kind of patience that looks like stillness, but is actually calculation running at full speed beneath a surface that gives nothing away. He looks at you across the table, and he says, "The people who last in this business are not the ones who are right. They are the ones who understand that being right is a resource. You spend it carefully, or you spend it all at once, and then you have nothing left." You do not respond. You do not need to. You sit with that sentence for 3 years. Managing director, 36 years old. Base salary that alone would have seemed impossible to your 24-year-old self, and a bonus structure tied to deal economics that in a strong year pushes your total compensation past $1.8 million. You have 2 direct reports who remind you of yourself, and 1 who reminds you of who you were trying not to become, and you watch all 3 of them with the particular attention of someone who understands that your job is no longer doing the work, but building the thing that does the work. You are in rooms now. Not conference rooms staged for presentations, the actual rooms, the one with 4 people and no slides, the one where someone's name becomes a verb because of what happened the last time they misread a situation. You know which deals are getting done before they are announced. You know which institution is under pressure before the quarter closes. You know because you have spent 12 years building the kind of trust that information travels through. And trust at this level is not warm. It is cold. It is a precise transactional currency that both parties understand and neither party names. Your wife asks you about a vacation, and you pull out your phone to check the calendar. And something in the motion, something in the automatic reach for the device before the answer, makes her go quiet in a way that lasts longer than the silence itself. You book the vacation. You cancel it once. You take it. You are 41 when they offer you partner. The number they put in front of you represents a share of the firm's economics, not just salary, but carried interest on funds under management, performance fees, co-investment rights on deals you help source. The math in a strong fund cycle is not millions. The math, if the vintage is right and the exits perform, approaches 8 figures over a 7-year period. You sign the document in a room with no ceremony. Someone shakes your hand. You go back to your desk. That night, you sit in your apartment on the 28th floor of a building on Park Avenue, and you try to feel the thing you were supposed to feel when you were 24 and imagining this moment. You find something, but it is not the thing. It is quieter than the thing, more like recognition than arrival, like finally understanding a sentence you have been reading for 17 years. The next morning, you are in at 6:15. There is a folder on your desk, blue pen annotations in the margins, a number at the top that is larger than anything most people will ever be responsible for. And across the floor, at a desk near the far window, a kid with a badge that still smells like the chemical printer is staring at 3 monitors, running a model, waiting to find out if anyone upstairs has learned his name yet. He believes what they told him about this place. He does not know yet what this place actually is.